Every second, billions of dollars travel across borders. Yet behind every international payment lies a financial system built decades ago, one that is slow, expensive, and surprisingly inefficient. Businesses lose billions every year to correspondent banking fees. Transfers can take days. Money often passes through multiple banks before reaching its destination. But what if there were another way? What if a blockchain could move value around the world in seconds instead of days? For a fraction of a penny? This is the story of Algorand, a blockchain designed not simply to compete with cryptocurrencies, but to modernize the infrastructure behind global finance. If Algorand succeeds, it won't just change payments. It could reshape how money moves around the world. Most people assume sending money internationally is simple. Click send, wait, done. But behind the scenes, the process is anything but simple. International payments often rely on correspondent banking. Imagine trying to travel somewhere without direct flights. Instead of flying once, you stop in 3 different airports. Each airport charges a fee. Each introduces delays. And every stop creates another opportunity for problems. Money works much the same way. A payment may travel through several correspondent banks before reaching its final destination. Every intermediary charges processing fees. Foreign exchange costs accumulate. Compliance checks are repeated. Settlement slows. For businesses moving millions of dollars every day, these costs become enormous. The problem isn't that banks don't want faster payments. It's that the system itself was designed long before blockchain existed. Banks maintain billions of dollars inside foreign accounts called nostro and vostro accounts. That money simply sits there, waiting, instead of being invested elsewhere. Then come regulations. Every institution performs anti-money laundering checks. Know your customer verification, sanctions screening, risk management. Each step protects the financial system. But every step also costs money. Technology alone cannot eliminate these requirements. It can only make everything around them significantly more efficient. This is where Algorand enters the conversation. Unlike many early blockchains built primarily for speculation, Algorand was engineered with financial infrastructure in mind. Transactions settle in seconds. Fees are typically fractions of a cent. The network offers deterministic finality. Once confirmed, transactions cannot be reversed. For financial institutions, this matters enormously. Instead of routing payments through several correspondent banks, value could move directly across a blockchain network. Stablecoins, tokenized deposits, digital assets, all transferred almost instantly. Smart contracts could automate settlement, reduce reconciliation, lower operational costs, and increase transparency. Rather than replacing banks, Algorand could become part of the infrastructure banks use. But superior technology doesn't guarantee victory. Algorand competes against powerful blockchain ecosystems: Ethereum, Solana, Ripple, Stellar, and emerging institutional blockchain platforms. Winning requires much more than speed. It requires developer adoption, institutional trust, regulatory acceptance, liquidity, and real-world partnerships. History has shown that markets often reward ecosystems, not just technology. The blockchain that attracts banks, governments, payment companies, and developers together may ultimately become the standard. Imagine a future where major financial institutions settle international payments on Algorand. Transaction volume grows. Developers build new financial applications. Governments issue digital assets. Stablecoins expand. Businesses reduce payment costs dramatically. Such adoption would likely strengthen Algorand's ecosystem. Greater network usage often attracts more developers, more businesses, more investors, and more innovation. Could that increase Algorand's market capitalization? Potentially. Could it increase the price of Algorand? Possibly. But markets are rarely that simple. Token value depends on demand, supply, investor sentiment, competition, macroeconomic conditions, and regulation. Real-world adoption matters. But price always reflects many factors, not just technology. Algorand isn't trying to become another payment app. Its larger ambition is to modernize the infrastructure beneath international finance. If correspondent banking evolves, blockchain could become one of its foundations. Whether Algorand becomes the dominant network remains uncertain. Technology alone doesn't determine winners. Adoption does, regulation does, trust does. But one thing is increasingly clear: the future of moving money may look very different from the system we rely on today. And Algorand intends to be part of that future.